Welcome to the coronavirus interview series. And today, on the 26th of March 2020, I've got my very close friend, Nick Martin, who's here from the Taurus Institute, who is a wealth strategist, who I thought I'd bring on to have a conversation about some deeper concerns about the nature of the economy, your investments, what investments you should be looking at, what to be concerned about, what you need to know. Nick is an absolute wealth of knowledge and is a very wise investor, and he trains people on what they should do with their money and how to think about wealth creation. So thanks for jumping on the call, Nick. I'm excited to explore the coronavirus and what's happening right now to help people get the information that they need to get.
Thank you very much, Chris, for inviting me, and hopefully I can give some good nuggets of wisdom so that we can help people not only protect their finance, but also thrive in the next decade to come.
Yeah, nice one. Well, let's kick the conversation off by looking at what do you think is actually, what's your take on what's actually happening right now in terms of the markets and the economy? Because there's obviously been a lot of fluctuations. There's been a lot of major losses. There's been a lot of carnage in a lot of different industries. What's your take on what's actually happening right now from a macro perspective?
So what's taken place over the last month is what's called a liquidity crisis. So when you have people that are over leveraged, so leverage means that they borrow money to put into investments, which actually increases the risk. But what happens is you can risk things 10 to 1, 20 to 1. Some places go as high as 100 to 1. So they have $1, but they borrow 100 to put on an investment. So what happens in a liquidity crisis is everything's on the table. If you can sell it, it's going to get sold. And so the exact same thing happened in 2008. And for the last 5,000 years, gold has been a safe haven. Now, gold has always been a safe haven, but it's changed since the 1980s because now we have what's considered paper gold. So right now there's about 90 paper ounces that are traded every day for 1 ounce that's actually in reserve. So that's 90 to 1. That's kind of a crazy amount of leverage, but there's a lot of paper gold and derivatives. But I'm getting sidetracked. But yeah, right now, gold was the safe haven, but 2008, it actually plummeted with the market. And the exact same thing's happening today. So these people that are over leveraged, these finances that are over leveraged, they're having to sell. And they're not the only ones selling. Where a lot of people's 401ks or their superannuations are sitting, they're having to sell as well. Now, it can crater even worse from today. There's a lot of what's called corporate bonds, and these are big companies like Boeing, like IBM. And what they'll do is they'll make a bond and they'll give it out. But those bonds have what's called a rating. And as soon as those ratings actually go down, the big institutions can't invest into them anymore. They're considered what's called a junk bond. And so if those bonds start to go out, we could see an even bigger flurry of liquidity crisis. So, everything's on the table today because the coronavirus is so unprecedented. I mean, there's really not one time in history that you can see the whole world pretty much going on lockdown, But nonetheless, there was these unprecedented times for, our grandparents. Both my grandfathers served in World War II. They got through it. Now, they were a bit different through it, and I imagine a lot of our medical people that are serving today, that are pretty much on the front lines of this pandemic, they're going to be quite different after this as well, which I give a lot of energy and a lot of praise to these people that are just showing up very brave every day, and even though the numbers just keep getting worse and worse. So financially, getting back onto that side of things, yeah, liquidity, everything gets on the chopping block. Same with Bitcoin. Bitcoin, a lot of people think it's a safe haven. It hasn't quite reached that state yet, but it lost more than anything else over the last month. But nonetheless, some of these volatile assets, Bitcoin's also, gone up 35% in the last, 4 or 5 days.
Yeah.
So it might have lost 45%, but it jumped back up pretty quickly as well.
Yeah. So with a lot of these different asset categories, there's obviously a lot of volatility. A lot of people are going to be asking, well, how do I protect my assets? So how do I protect and how do I leverage my wealth right now? Because obviously, people that have their wealth in real estate, some people might have them in stocks and bonds, some people might have cash, some people might be holding metals, crypto, that sort of stuff. Have you got any advice for what's the strategy right now? Like what sort of market are we in, and what is the strategy? What do you do to try and protect and grow your wealth in these sorts of situations?
First thing you need to do is you need to actually, and this is what I do with my clients, is you sit down and you make what's called an asset allocation. So you take everything that you own, could be your house, could be your bank account, could be your superannuation, could be any stocks, any bonds, any crypto you may have. Put it all into a spreadsheet and then make an actual pie chart to see how much you might be in any one category. So a lot of people I know may have the majority of all their money in their house. They might have an investment property, and I've had clients that have had 94% of all their wealth is only in real estate. And especially in times like that, like what we're going through today, it's not liquid. You can't just get in and out of real estate. And right now is probably the worst time to panic and try and get out. So the first place is you have to start and see where you're at. Draw a pie graph. You know that 30% is in Australian dollars, and then find ways to diversify. So what's worked over the last decade was just keep putting money into stocks, and that train just kept going up and up and up. And it was really a very big bubble. There was a lot of foundational cracks that were showing up long before the coronavirus. But you need to see where you can diversify yourself. So what I did, quite a few of my clients did, was get into US dollars. Now, if you would have got into US dollars, your purchasing power in Australian dollars would be upwards of 40% right now. And so just by, you can still have your money in fiat currency, but there's ways you can trade into Australian dollars, Australian to US dollars in any of your major brokerages. But what you want to do is you want to try and diversify that. So a lot of people I know have a house and have Australian dollars. So there's two things in their basket. That's it. Two. What happens when Australian dollar potentially goes into hyperinflation? America just did a $2 trillion bailout, and for people, they don't typically understand how much a trillion is. It's really easy to say, but the actual amount of it is crazy. So 1 billion seconds equals about 12 days. We're 1 million. 1 million seconds equals 12 days. 1 billion equals 33 years worth of seconds. 1 trillion equals 33,000 years. And if you were to stack up $100 bills, 1 million would be as high as your chair. 1 billion of $100 bills stacked all the way up would be as high as the tallest building on earth. And 1 trillion $100 bills stacked all the way up 2.5 times the size, the height of the International Space Station. So America just went and said, oh, yep, 2 trillion. And they're actually pushing for 6 trillion. Now, the amount of money that they printed in 2008 was more money than the country printed in its entire existence before that point, close to 200 years. And they printed more money in less than 10 years in that same amount of time. And every year our money keeps going down in value. So that's why you want to diversify. So for your average person, you don't want to just buy single stocks. You want to be buying index funds or ETFs. Now, those do come with inherent risks. And even though I do recommend them, now is one of the times where I do not recommend them at all. So an ETF and a index fund is like, so let's just take the S&P 500. Everyone pretty much knows what that is. That's 500 companies' shares that are all welded together into one. So if it's all welded together into one, you can't just take out Apple, you can't just take out Amazon. They're all welded to one. So what's going to happen, and what's happening already, is the majority of people are in index funds, and that's not a good thing. So when the majority gets in, that's usually when you want to be doing the contrarian side of that. You want to be getting out of that. So what's already happening is people are selling no matter what. So the index will keep lowering down below what the actual intrinsic value of all those 500 companies are. So kind of like being in a really crowded theater and somebody yelling fire. So everyone's going to kind of try and cram out, and what you'll actually start to see, that's the best time to get into them. But I don't think we're at that stage yet. But other ways to diversify yourself are, first off, US dollars, probably one of the best things today. And yeah, I mean, it does suck when it's 58 cents on the dollar for Australia's right now, but I still think it could potentially go lower. The more amount of money that the central banks print, it's more and more bullish for crypto. There's still a lot that's got to be proven out. I wouldn't recommend crypto for your retirees or something, but you know, even having 1 to 2% of your asset class, you know, that pie, if you have 1 to 2% of that in crypto, and ideally what you can find, what you can look for and find, is there's quite a few of them out there. There's index funds of the top 5, 10, 30 cryptos. That's what you want to buy. You don't want to just buy single ones, because there's still a lot of unknowns. But if you just put, you know, if you're younger, I recommend putting close to 10% of your net worth into crypto. But really, another way to think about the last 10 years, it was like a smooth highway, kind of like the Autobahn. You could drive a Ferrari on it, and you could drive as fast as you want. The next 10 years, and this was long before the coronavirus was happening, you want your portfolio to almost be all terrain, and that's, you know, a key part of that is actually precious metals. Most people today, they don't, you know, they know about gold and silver, but barely anybody I know actually owns any. And on top of that, there's this comedian that was in California, and he had Hershey's chocolate bars and a 10-ounce bar of silver. And he asked people, do you want a Hershey bar or do you want a 10-ounce bar of silver? And every single person said, what would I do with the silver? Why would I do that? And 10-ounce bar of silver is 150 US dollars, but they went for the 99-cent chocolate bar all day long. And he was actually right across the street from a precious metals place, because he had a couple of people say, that's not real silver. He said, there's a precious metals place right there, we can go check. They actually want it that way. And for a lot of people though too, they think, oh, well, at least in US dollars, the gold price actually went down. It's actually not the gold price went down, the dollar got stronger, but there's so much paper gold and silver now. We're looking at what is potentially a financial reset. Like, there's so much debt in the system that it just keeps compounding. You know, America before this, they were already $22 trillion in debt, and around the world there's over, I think there's like $17 trillion debt that's already in negative interest rates. So that's $17 trillion that's guaranteed to lose money. And all this debt is just gotten so big, it's just a monster, and there's no way out of it. There has to be a lot of default. There's literally no way out of it. What they're doing, what they're going to try and continue to do, is print and print and print. And we can look at how this has worked out many times. This is exactly what Rome did. Rome used to take their coins and they used to clip the corners of it initially to make the coins worth less and less and less, which is just the same thing that we did today with printing more and more and more. Then they went to changing the metallurgy, so they had to put less and less gold and silver into them. It's the same thing with printing more and more and more, to the point where there was barely any gold or silver in it. And at that point, yeah, Rome eventually fell. If anybody does want to know more about precious metals to get started, there's a really great series on YouTube that's called Hidden Secrets of Money. Not only does it maps out pretty much what's already happened, but what's going to happen into the future. But Mike Maloney did a really great job of going over, actually, I think it's episode number 3. They're each one of them about half an hour long, but episode number 3 really shows you how money is printed, how it's made, and where the most amount of money is actually made, which is in the banks, and it's outrageous. And if everyone knew this today, actually Henry Ford was a really famous quote that Henry Ford said, if everyone knew how the monetary system worked, there'd be riots in the streets tomorrow. But it's kind of like the bar of silver. People just don't understand what real money are today. But getting back into the precious metals, right now, so gold's always going to be considered money. It's used in jewelry, but I think it's like 98% of all gold that's ever mined is still accessible. Now, that's not the case with silver. Silver, in my opinion, is one of the absolute best investments, risk-free investments that you can get today. Now, the problem is you can't really get any physical silver. Almost every dealer on earth is sold out. Now, there are places like Perth Mint and ABC Bullion where you can buy what's called pooled silver, and you can also pre-order. That's what I recommend. I don't recommend right now. It's so risky that to buy anything that's paper gold, which would be like something on the stock market like GLD or anything like that, it's not really worth it, because if these big institutions that hold that, which potentially could be Chapter 11, if they go broke, you'll have a certificate saying that it AOT, but you'll never be able to get that gold. But right now, I can't really give anybody recommendations, but what I am doing is I am buying platinum and I'm buying silver, and I buy more as it goes down. Silver actually went down quite a bit against Aussie dollar, but then it's done what's called a V bottom. It's gone down and it's going straight back up. And from here, I could easily see it 10xing. So you just need to really look at what could be an all-terrain portfolio going forward. We've already covered a few precious metals, putting your money into other fiat currencies. In the long term, the US dollar could hyperinflate. It's still the world reserve currency. I don't see that happening just yet. But then a bit in crypto as well. Now, if you hold real estate right now, it would probably be a bad time to sell. One of the things that long term, which is good about real estate, is that it is kind of an inflation hedge. So if inflation keeps going up, your house prices and stuff will keep going up with it. Yeah, we could hit a really weird area there too, where hyperinflation goes up, like the prices, everyone's wages are going to have to start going up as well, and so you can actually start making a whole lot more money, and you could pay down your debt faster, quicker, and easier. But those are when we go into hyperinflation, crazy scenarios.
Yeah. So there's obviously a lot of stimulus. There's a lot of money that's being pumped into the economy right now. The American government, as you said, they announced $2 trillion. The Australian government's following suit, and all governments will have to be doing some kind of stimulus because there is no other option, right? Otherwise, we're talking about the downfall of the modern world. So in these times where you've got governments that are printing currency, what would you say the opportunities here to actually, because there has to be opportunities here for people to actually capitalize on some of the changes? And there's still going to be money and currency flowing through the economy. What would be your recommendation for the most wise investments right now? If people are holding cash, for example, if people have an opportunity to, to borrow against their equity in their homes and those sorts of stuff. If people have excess cash right now, what would you say is going to be the wise moves?
Well, so there's a crazy number where Australians, I think, pay 80% of what they invest is just in the ASX, which is just Australian stocks and stuff. That's keeping a lot more of your assets in one basket. What I would recommend is to start looking at more emerging markets who have more potential into the long run. Some great ones to look at would be maybe more longer term index funds with India, Brazil. You're going to want to be looking at some of these emerging markets that de-risk you. So, this is a big pandemic. It can be a long drawn out one as well, but your eggs are in different baskets. So I don't necessarily, I wouldn't be pulling much equity out of my house yet, because one of the main things you want to do right now is you want to be out of as much debt as you can do. Because, unless they'll allow us to start defaulting, because a lot of businesses are just going to have a very hard time moving forward. I think one of the main things you want to do is be out of debt, but then ready when, the fear curve is quite strong right now. I know that the stock markets are just starting to rally a bit, but more or less that's actually going to be a bear market rally. So these are the times, if you're still holding some stocks that you haven't sold out of yet, you want to actually be selling those into strength. So the stock market works, psychology and investing and trading is hard for us as humans. So when things go on sale, everyone loses their shit. And that's actually the times where you do want to be buying more. Now, right now, we have the highest amount of risk, especially in equities, that it will ever be in our lifetimes. And, at best, we're looking at a recession. At worst, we're looking at a full-on depression. But nonetheless, this is actually one of the best times. So there's been some case studies of, there was a lady throughout the entire depression. She still put in X amount of money that she made. She still put it in the entire time. And she came out of the depression with millions of dollars, because stock market kept going up and up and up, and the compounding interest on top of what she was putting in, even when everyone else is saying, why would you put money in shares? That's actually the best time. So you can actually, even, especially with magazine covers, you can usually go do the exact opposite of what you see on all the magazine covers. Because just a couple months ago, The Economist had all these tech companies, and they were bulls, and they were all going towards $2 trillion. That was a huge red flag. You want to do the exact opposite of what everyone else is doing. And that's when the whole market was actually going into what some people consider a melt up. It's just going up, and the whole market was priced to perfection. Now, where we're at today, the market can still fall significantly from here. So I don't recommend anybody, unless you're a sophisticated investor or trader, to be trying to take money in and out quickly here, because what you'll end up doing is you'll try and pick up pennies and nickels in front of a steamroller. It can easily go down for another 30% from here. So now is a good time to be into fiat currencies. And yes, America can be printing lots of money, but every government around the world can be printing lots of money. So US dollar still has such a stronghold, because it's the world reserve currency, because so many other currencies have debt in US dollar. There's a really good article, it's called the dollar milkshake theory, and it's on Medium, and it'll give you a good idea of why the US dollar, as chaos goes, the US dollar is still going to get stronger and stronger. And trust me, I'm not a fan of the US dollar at all, but it's still a great place to be diversified right now.
Yeah, so it's still performing pretty well. I mean, obviously we're in Australia, so still you reckon that the US dollar is still going to strengthen against the Aussie?
I still do, yeah. I mean, I think it's 74% of all of Australians' exports go to two countries, and that's China and Japan. And right now we're having a shock on almost three different levels. We have a supply shock, so all of these supply systems are shocked. That, you can't put together a car if you're missing 5 pieces. You can't finish the car, even doesn't matter how small they are. So supply systems are absolutely shocked. But then you also have a demand shock. So everyone's pulling in their horns. They can't go out to eat. They can't go to the movies. They're a whole lot less likely to buy that new car, to buy that new TV. So all of these exports that are going out, and all these countries are now so indebted that they'll probably likely have to spend stimulus, but there's a lot less companies that are going to build new skyscrapers, that are going to build new things. So there's going to be less need for iron. There's going to be less need for nickel or all these other mines, minerals, which is a big export of Australia. And going forward, there's going to be less and less use of coal. So yeah, I think that the Australian dollar is still quite fragile where we're at. We haven't hit historic lows yet, and we could against the US dollar.
Yeah. Well, I guess that's going to be one opportunity for people is considering diversifying, I guess, the currency where their savings are actually allocated. Have you got any advice for people in general in terms of, I mean, is there any trends that you can pick up on in terms of where the stock market's going to finish up at, or can you predict with any level of certainty? Obviously, this is unprecedented times. You have no idea where this is going to go, but as far as your awareness, is there any predictive capacity right now to know how far things will go before they totally bottom out? And how do you know when to actually jump into those opportunities? How do you time that?
Well, so there's a story of when 2008 happened. It was a housing crisis, and everyone was in that crowded theater rushing towards the exit. Now, that's when you have the opportunity to do what's called a crisis investing. And that's when you have the opportunity to come in when everyone else is trying to go out. And that's where people in Las Vegas got apartments for $200,000 or $50,000. These just crazy numbers can happen when that happens. So what happens usually is when there's a cycle up, there's usually a cycle down, and there's the median. And usually when it far surpasses the median, which the stock market's done for a while, it'll actually overcorrect. Now, one of the times you're going to want to invest, because right now people are thinking, oh wow, that's a good deal, that's a good deal. Oh wow, oh my gosh, Qantas just went down to X amount of dollars, but then rallied 20% because the government said they were going to bail them out. It can still go down a lot further here. So when people are telling you you're crazy for buying shares, that's probably the best time to be getting in. When people are saying you're absolutely not, that market is dead, everything's dead about that. Long term, shares will actually probably increase in Australian dollar terms. But the problem with that, though, too, is the Aussie dollar will be worth a lot less at that point, though, too. So at some point, you're still going to want to hold some shares, but it's anyone's guess. Every previous model would be a model of, if there was a supply shock, if there was a demand shock. Now we have a psychological shock. I mean, what's happened over the last month, especially in places like Spain right now, Italy, this is psychologically changing the way people are thinking, acting, and this will reverberate for at least a decade going forward. Companies are going to actually want to have some free cash flow. Some of the craziness that's happening in the United States over the last few years is companies have actually been buying back their shares. So the largest airlines in America have been buying back 96% of their free cash flow of buying back their own shares, boosting the share price, and now they just want to bail out. And so right now it gets a bit crazy too, because we have disparity where the haves and the have-nots are at one of the greatest, in recorded history, they are at the greatest distance. There's 3 men in America that hold more money than the bottom 160, the bottom 50%, 160 million. And so right now, a lot of the billionaires in America have already got out. For the last 5 years plus, they've been building what's called bolt holes in places like New Zealand, and they're gone. There's a place in San Francisco called Billionaires Row, and some of the houses have got these are big mansions, and they've actually taped up the windows with paper because San Francisco is one of the highest disparity places in the entire world, and so there's a kind of a powder keg going on right now in America and Europe where the pitchforks can come out, the riots, looting. I don't want to see it. That's why America's got the military deployed in a lot of places already, but it is quite a powder keg. And when you see your country bail out all these banks, the ones that caused 2008, and you know the long-term repercussions, they give themselves bigger bonuses every year, and then they just put everything more at risk. People are not going to be happy when articles are floating around that they put 96% of their free cash flow into buyback, boosting their share price. People are not going to be happy. When people, which are already happening in the United States, they're already on their pension and they're losing it. So they're already retroactively saying, you're already retired. Nope, you're getting 10% less every year now. And that really hurts a lot of people. I think one of the things that's the safest thing to do right now is to educate yourself. Educate yourself about money, where it is, where it potentially could be going over the next 10 years, because it can get really weird. And the more that you educate yourself, the more you can start to be ready. One of the surest bets I've ever seen in my life is silver right now. The risk, especially if you hold the physical metal yourself, is almost zero. The upside is so dramatic. What will happen over the next 5 or 10 years, and probably over the next year, at the rate we're at, is there will be a supply shock where there's lots of people are going to want silver and gold, even platinum, but they won't be able to get the physical. Right now, you can't get the physical. And so with normal supply and demand, that means the price should shoot up. But there's still a lot of paper silver, so it will shoot up. The actual physical demand for it will shoot up big time, and most people have none of it. Over the last 5,000 years, central banks, people usually had 10% of their money in precious metals. Well, since fiat currencies began, they had 10% of their money in precious metals. In the next decade forward, I would highly recommend that. There's actually a story of this Italian family that held their wealth for generation after generation after generation, and there's an article written on them. How did you hold your wealth through all these world wars, through all that Europe went through? And they held their money in real estate, they held their money in gold, and they held their money in art. Things took a hit, but the family never started chasing other investment opportunities because these were the safest, most long-term bets. These are what held their wealth or grew it over time. And I guess another another thing that's going to happen over the next decade is there's something called the gold to silver ratio. So over history, for every 1 ounce of gold, there used to be 12 ounces of silver that were pulled out of the ground. Now with mining techniques and everything, that's changed over the years, but over the last, I think, 100 years, it's gone between a low of around 34 all the way up to 100. Now it's gone up to 100, so that's 1 ounce of gold for every 100 ounces of silver, or 1 ounce of gold for every 34 ounces of silver. Now, what you're going to see in the next decade is, right now it's historic highs. It actually went up to 120. It's only hit 101 4 times in recorded history. It's now hit 120. Pretty crazy times, unprecedented, but nonetheless, that will revert back. Getting back to silver, I don't want to beat up this dog too much, but half of all silver that's mined today is what's called junk. It goes in landfill. It goes in electronics. It goes in solar panels. It goes in medicines. It goes in antibiotics, and it will never be retrieved. Gold, there's 96% of it that's accessible by humans. Silver is, there's a couple of links that we can share with this. You can see the amount of silver that's ever been mined. It's really cool graphics, and half of it's gone. So looking at normal supply and demand, eventually when there's going to be huge demand, that's when you're going to want to be trading it back.
Yeah.
For other real assets.
Yeah. So I'm getting the impression that obviously precious metals right now is that'll be your tip. If people hold currency right now, it looks to me like there's going to be a huge depreciation of currency in general. Yeah, in terms of if you're holding cash versus holding metals, the depreciation of cash, it looks to me like that would be. Is that what you're saying? Would be because of the amount of currency that's being produced, it wouldn't make sense to hold cash at the moment. Is that fair to say, or not necessarily?
No, cash is king, especially in a bear market like today. So cash is still king. A lot of people are not going to believe that, but when everyone's rushing out that exit door, cash is what people are wanting. Cash is what people need to still pay their rent, to pay their employees, pay whatever. So cash is still king, and yeah, right now I would be holding cash, looking for really good opportunities. Like the magazines I was talking about earlier, you want to do the opposite of what the magazines show. And right now it's showing, The Economist has got the cover where it's the world and it's got a close sign on it. And usually, so in the next decade, there will be a point where there'll be a huge rush for gold and precious metals. I can almost guarantee it. And when gold and precious metals are on the front page of the magazines, are in the newspapers, on the news, that's the time you want to actually be selling. When everyone else is going crazy for it, it's psychology, but you want to buy low and sell high. When you buy low, it's when the appreciation is not very well priced in. When people aren't thinking it's a long-term investment. I've been going to gold and silver investment conferences in Australia for years. And when I go there and there's very little people, that's the best time to buy, the absolute best time to buy. When those conferences are packed and they're crazy, same things happen with crypto conferences. When they're packed and they're going crazy, that's the time that you want to be selling. You want to be the contrarian, and you want to be doing the opposite. And right now, especially with all the printing, it's very bullish for gold. It's very bullish for Bitcoin, long term. And same with real estate. Look, real estate's people have to live somewhere, and so I don't recommend, unless your burn rate, unless you cannot stay in your home, unless even if you do have to tap your equity to pursue on, you have to look at your own circumstances, but I don't recommend getting out of real estate yet. If you're looking to buy, there's going to be some amazing deals in the next year, some absolutely amazing deals.
Have you got any predictions there on real estate? What do you think could happen there?
Well, I think Australia has been in one of the largest housing bubbles in history. Even before coronavirus, Sydney and Melbourne were going down, but then coming back up a little bit, but the trend is still down. And I think it's got a long ways to go. And when it does finally bottom out, I mean, quite a few houses in Sydney, Melbourne especially, that were way overpriced could be worth half of what they were then. And at that point, that's going to be, you want to be buying on the fear curve when the fear is at its absolute height, when, no one's running an auction because they're too afraid they won't get anything for it, or if there's barely anybody looking at these houses, that's going to be one of the absolute best times. In America, one of the smartest investors I know actually took all of his 401k, which is the same as superannuation, and he started buying a bunch of houses. These are low budget, tiny houses. He bought 36 of them in Detroit. Some of them were like 10 grand each. He fixed half of them up, sold them later for 4 or 6 times more than he bought them for, and literally, and now he still has about half of them, and he gets rent on those constant, and all of them are paid off. So when everyone's going towards those exits, you could say that with stocks right now. The problem is with stocks is everything in stocks is forward looking. Now, almost every company you can see out there, when are they going to have good earnings? When are they going to have profits again? That's a huge question mark. So that uncertainty, and the longer that the coronavirus could potentially take, could push stocks down quite a bit further because they are still considered quite risky. So I think half the theaters running towards the exits, or maybe even a quarter. I don't think the place is on fire yet. If that helps.
Yeah. And I can see as well, Nick, there's going to be a lot of opportunities for that. Even though there's a lot of companies that are going to be downsizing and reducing their earnings, there's a lot of companies that are going to be thriving through this period. Like there's going to be companies that are going to do very, very well. Like I was just looking at Zoom stocks, obviously the technology that we're using now to do video conferencing, that they've been killing it. So there's going to be a lot of companies here that do really well through there's going to be forced innovation, forced creativity, but obviously everything's going online. Businesses are going online. The whole economy is going to be moved from essentially the trade is going to be moved into the online marketplace. So any businesses that are able to keep trading online, I can see they're going to do well. So have you got any hot tips or any recommendations for those kinds of stocks or businesses that are still able to operate online?
There's still quite a few of them. One of the issues with especially some of the big tech giants is the majority of all their money is brought in by advertisements, and advertisements are going to go down massively if people are not spending any money. So these advertisements have to expect that there's going to be a return, and so I still think there are going to be some, but for somebody that's you have to be a pretty educated investor. One of the worst things, one of the easiest ways to lose a lot of money is just taking stock tips. Because if you're going to take that stock tip, you need to know when to exit. You need to know what the fundamentals are in that company. Most of the people hear something at a barbecue, they hear, oh, lithium's the next thing, but they don't realize there's an abundance of lithium, and there's so many mines coming online that they're probably buying the top. So I really do, I have a lot of people that want to know specifics, but I can't see anything more solid than silver right now, or even cryptos. If you get buy an index of the top cryptos, especially right now, hold it for a few years, you can be in a good position. Stocks are still too risky. I mean, crypto is risky too, but there's a higher risk, and you have to look at what the future is going to bring. I think cryptos have got so much further to go. Cryptos are an absolute brain drain of the smartest, most forward-looking people. If you can think of Elon Musk, everyone that's like that, that's in the finance, they don't work on Wall Street anymore. They're all going into crypto. There's an entire financial system being built, an entire new world, and it is so big it's hard for people to understand, but it will be bigger than what the internet is today. What crypto, how much of it will be going throughout our lives. A lot of the internet will be powered by crypto in the future. So instead of Facebook and Google stealing all your information, you pay 1 cent to do a search, and yeah, they would still make as much money, but they wouldn't have to steal all your information and target ad you and do all sorts of predator stuff they do today.
Yeah, I love that, Nick. There's obviously, with things like blockchain and crypto, there's obviously an inherent, I guess you would say, an integrity that can be built into the design, which has a lot of upside for humanity. So I consider that industry has a lot of potential to elevate humanity. I guess that's probably a whole nother conversation, but I'd love to know, have you got any tips for guys that are wanting to get into crypto? If people are wanting, you mentioned obviously there are some index funds there that are weighted across the highest performing cryptos, or an average of those cryptos. Have you got any recommendations for where people should be investing, or how to find out more?
The main thing is to start. So there's actually a place, they're accredited in the European Union. They're called Economy, and they've got teams that put together, pretty much an index fund of crypto. That's a pretty good one. There's also a few other ones, but don't go. I think 90% of the entire market cap of crypto is in the top 30. So the best ideal index for crypto would be the top 30. Even the top 10 is good. There is a Bloomberg Galaxy one that I think has a ticker symbol, but I think you have to be accredited to get into that. Yeah, and there are other ones. I haven't looked into them for about a year, but there are other index funds just for crypto that I would, getting into an index fund is paramount. There can be a lot of changes over the next year. You probably know. I'll be a very big contrarian, but Bitcoin SV, which potentially has the original creator of Bitcoin, which is Satoshi Nakamoto, Craig Wright, who's actually an Australian. There's a huge amount of evidence, but no one believes him. There's been a big slur campaign, and one of the reasons that I used to just push Bitcoin, just get into Bitcoin, but that power could be shifting big time over this next year because of a lot of things. Craig's actually in several court cases, and eventually they will prove that he is, without a shadow of a doubt, Satoshi Nakamoto. And once that day happens, it could be a big changing of the guards within crypto, and it's going to hurt the industry a little bit, but over the long run, his vision, his future is, he's miles ahead of any other crypto. I'm right now, especially with the price going down, I kept buying more and more Bitcoin SV.
Yeah, BSV, you reckon that's the highest performing, you think, out of all the crypto options at the moment?
Yeah. Especially, I've done a lot of research, and yeah, Craig, without a doubt, me, Craig is Satoshi Nakamoto, and he holds over 1.1 million Bitcoins, and he's publicly said that he will dump them, but they're going to be going into charities. He won't dump them, but he's going to try and maximize his profit. So he's going to get rid of, that's 1/20th of the amount of Bitcoin in total, and he's going to put the majority of that into projects, charities that are going to be run on Bitcoin SV. And he's also building what's called the MetaNet, where the entire internet can run on Bitcoin SV, and it's so far ahead of what anybody else is thinking about. And I think one of the big issues that people have with Craig is he's very abrupt. He's got Asperger's pretty badly, and so people, yeah, he's a bit harsh, but his view and what he's building is paramount. So Bitcoin SV and silver are what I'm buying at the moment.
Yeah, good. Thanks for your tips. Yeah. Well, thanks, Nick. We appreciate you coming on and giving your advice and your wisdom today. Thank you so much for chatting to us. Really appreciate it.
Yep. Thanks, Chris. And,
yeah, you're welcome. For those that want a bit of extra information, have you got any details for guys that want to get involved with finding out more about what you do and how you might be able to help them?
Yeah, we don't have anything going on right now, so I've still got some of my existing clients that I'm working with, but we're pretty busy with current events and we're not taking on any new clients at the moment.
Yeah, all good. Great. Well, we'll drop a few links in the comments below for some of the resources. But yeah, big tips on silver and Bitcoin SV. So thanks, Nick. Appreciate you.
You're welcome. Thanks, Chris, for having me.
Yeah.
Stay safe out there, and remember, you need a all-terrain portfolio going forward. It's going to be, especially with the very start of this decade, starting out like this. And one of the best people. Sorry, one more tip is Ray Dalio is one of the best people you can read, and he's got something that's called the Big Debt Crisis, and these cycles that play out. He's got, we'll link to it in the show notes as well. He's got 30-minute YouTube videos about how the economic machine works. He's one of the most successful hedge fund investors in the world, and yeah, you learn that. He just came out with a paper not too long ago talking about how every decade there's usually shifts, and he came out, this was early last year, saying there's a place in everyone's portfolio for gold. And so yeah, start following. Oh, I do have one more tip. Now, if anybody wants to have really good news, there's what's called the information for the masses, which is going to be your typical news, your social media, your magazines, newspapers, and stuff like that. But then there's information for the classes. It's a channel called Real Vision, and if you want to stay up to date on what's really happening, and this is people that are they're very good investors. They're not trying to sell you anything. They're just pretty much going over current events, going over what's actually going on. And it's one of the biggest wealth of information that I've ever found, best content. And they're talking to people that are pretty much writing the books on these things. And the people that, their clients are multi-billion-dollar investors that, not investors, but sovereign wealth funds and institutions. So they really know their stuff. And this is great information. There's a free channel on YouTube that's called Real Vision, but look into it. If anybody wants to get more turned on, they've got entire series on gold and Bitcoin. It's hands down one of the best financial channels for the classes, not the masses, that is available today.
Great. Thanks for the tip. Much appreciated.
No worries.
Thanks, Nick. Appreciate it.
All right. Stay safe out there, guys.